What's up guys, in today's video I'll be showing you how to invest in dividend stocks for passive income. Dividend stocks are a great way to grow your money and to receive extra income on the side. So there'll be 4 topics I'll be covering in today's video. 1. What is a dividend stock? 2. Important dates to remember when you're buying dividend stocks. 3. Why you should be investing in dividend stocks. And 4. Some dividend investing mistakes to avoid. Also, if you stay till the end, I'll be giving you guys 3 great dividend stocks that you should be buying for long-term growth as well as for that passive income. If you're going to enjoy this video, make sure to give it a thumbs up and subscribe for more investing content like this. Hopping right into topic number 1, what is a dividend? A dividend is a thank you, typically in the form of cash, for holding a company's stock. For example, let's say you own 1 share of Chevron stock. Chevron pays about $5.36 annually per share that you own. Chevron is pretty much saying, hey Joseph, thank you for buying and holding our stock throughout the year. We're going to pay you $5.36. Now, this payment is typically broken up throughout the year. Chevron does it quarterly, which is every 3 months. So every 3 months, you will receive about $1.30 per share that you own of Chevron. Some companies decide to pay this annually, semi-annually, or even quarterly, but it just depends on the company. And every company does not pay you dividends, so keep that in mind. There's difference between growth stocks and dividend stocks. Most growth stocks want to reinvest their profits right back into the business to help it grow even further, which should in return drive the price of the stock even higher. But when it comes to dividend stocks, most of their stocks are going to be on a slight growth or even stable. Some will even be downtrending. So when you're buying dividend stocks, definitely keep in mind the history of the stock's price. You want to be buying a stable and growing dividend company that pays you a pretty good dividend yield. Now, when it comes to dividend yields are pretty much a percentage of what you'll be making of the company's stock price. Now, for instance, if we go over to Google Finance and we look up CVX, which is Chevron, if we scroll down to the dividend yield, we'll see that Chevron has a 5.16% dividend yield. Now, in order to figure out what that stock is paying you in the form of the dollar amount, all you have to do is multiply the dividend yield by the stock price, and that will give you the dollar amount in what they're paying you per year. As I said before, remember it is broken up quarterly for Chevron, so you want to divide that by 4, and that will give you an average of what you'll be making every 3 months from the company. Another way to look at dividend yields is, let's say we have a stock price of $100 and that company is paying a 4% yield. That means you'll make $4 per year for every share that you own for that stock. So that is what is a dividend in a nutshell. It's pretty much a thank you for owning the stock, and the payment is broken up either monthly, quarterly, or semi-annually. Now, when we talk about important dates to remember when you're buying a dividend stock, the most important date you want to remember is the ex-dividend date. Now, if we look up Chevron's ex-dividend date, it'll show us that it was May 18th, 2021. That date pretty much tells you that you need to own that Chevron stock before May 18th in order to receive a dividend payout for the next quarter. Now, if you buy the stock on May 18th or after, you will not be eligible to receive the dividend payout for the next date, which would be on June 10th, 2021. So definitely keep that in mind when you're buying dividend stocks. You want to own it before the ex-dividend date because that is the cutoff for every quarter when you will receive your payment. Now, when we get into why you should be buying dividend stocks, the main reason why you should be buying dividend stocks is that it's another form of income. Building different income streams is a great way to build wealth, and dividend investing is one way to do it. Now, it's also free money essentially. They're paying you for owning the stock. You're not doing anything, you're not working for this money. It's completely passive. So that is another reason why you should be buying dividend stocks. And reason number 3 is that also if you do DRIP, which is dividend reinvesting plan, so instead of receiving a payout, it'll just go straight back into owning more shares of the stock. This is very great if you believe in that company long term. You're pretty much just getting free shares of the stock, and that is another great way to grow your money. Now let's get into some dividend investing mistakes to avoid. One of the main dividend mistakes that people make is buying that company because they have a high yield. Anywhere from 10 to 12% of a dividend yield is pretty questionable. Once you start to get past that, I would typically stay away from the stock, especially if you're getting closer to 20% dividend yields. Now, something to keep in mind is that the company can stop paying dividends whenever it wants. And if a company is paying, let's say, 15% dividend yields and they can't really sustain it, once they drop their dividend yields, that could definitely send the stock price flying down, and then you definitely lose a lot of money. Also, something to keep in mind is buying poor performing dividend stocks. Let's say the stock is downtrending about 4 to 5% per year, but they're paying you a 3% dividend yield. Obviously, you're losing money in that situation, so it's not worth the passive income in that situation. When you're buying dividend stocks, a great dividend yield percentage to stay around is between 3 and 6%. Obviously, you can go a little bit higher or lower depending on your taste. Something to also keep in mind is that you want to know whether or not that stock has been consistently paying dividends throughout the years. This will lower your risk when you're buying the stock because they have a track record of paying those dividends. And when it comes to the stock price itself, you want to buy a dividend stock that is either stable or even growing throughout the year. So not only do you gain appreciation on your money with the stock price, but you also receive the passive income from the dividends that they pay you. So definitely stay away from high dividend yield stocks. As I said before, it can be unsustainable and the company can stop paying those whenever they want. Now, for those of you who are still watching, now I'm going to give you guys the 3 stocks that you should be adding to your dividend portfolio. The first one that I have on my list is Public Storage, ticker symbol PSA. This stock is around $280 currently, which is kind of high on the year. They're in the real estate sector, and the yield for Public Storage is 2.9%, and they pay every quarter, which means they pay you about $8.40 per year, which is broken up 4 times throughout the year. Public Storage is actually the largest owner in self-storage, which means that they have a large cash flow coming in every month from the units that they are renting out. This means that the likelihood of Public Storage not paying you dividends or them even cutting dividends is very unlikely because they have the cash flow to support it. They've also been paying dividends every year consistently since 1981, which also limits your risk because they have a track record of consistently paying dividends. So that is stock number 1 for your dividend portfolio. Public Storage, they're not going anywhere. They've been around for a long time and they're in the real estate sector, which I like. Stock number 2 is Duke Energy, ticker symbol DUK. Duke Energy is around $100 per share currently, and they are in the utilities sector. The dividend yield for Duke Energy is 3.9%, and they pay this quarterly throughout the year. As I said before, the stock price for Duke is around $100. The yield is 3.9, so that will mean that you'll receive $3.90 annually for every share that you own of Duke. If you look at Duke Energy's chart, it looks very good long term. As you can see that they've been growing consistently throughout the years. That is something you want in a dividend stock that you're buying. As we can see, the Duke Energy chart looks very attractive, and not only are you going to grow your money long term, but you will also receive those dividend payouts. They've also been paying dividends consistently for 95 years, so that is something as a peace of mind that you will consistently still receive those dividends throughout the years. And last but not least, one of my favorites is Realty Income, ticker symbol O. The stock price is around $68.50. They are in the real estate sector as well, and their dividend yield is 4.1%. Another thing that I like about Realty Income is that they pay out dividends monthly. So that is about $2.72 that you make every year for every share that you own of Realty Income. And they have a steady cash flow coming in. This is very important, as I said before. You want to limit your risk when you're buying dividend stocks, and Realty Income actually owns 6.6 thousand real estate commercial owned properties, which they lease out to companies like Walmart, Walgreens, and FedEx. So they have their properties being leased out to great long-term companies, which means that they're probably not going to go out of business anytime soon and that they're here to stay. However, the price is kind of cheap, so you can load up on a stock like this. They're not going to go anywhere. As I said before, they're in the real estate sector and they have great clients like Walmart, FedEx, and Walgreens. Let me know what you guys thought about those 3 dividend stocks in the comment section down below and whether or not you'll be buying them to add to your portfolio. And that concludes this video. As I said before, dividends are a great way to receive passive income, and you want to focus on great companies when you're buying dividend stocks. If you learned anything from this video, make sure to subscribe and turn on post notifications so you don't miss when I upload. I'll see you in the next one.